Hey guys, hello everyone. My name is Dan Singh, and I welcome you all to a new series that we are starting here at AFI, which is called the 101 to Investing in Crypto for Absolute Beginners. In this series, we are going to go step by step of how you can start your crypto investing journey. And we'll just keep it super simple. We won't talk about complex narratives. We won't talk about complex stories. We won't talk about complex economies, how crypto is changing the world, how crypto is creating an alternate financial world, how crypto is changing is giving more power to retail, how crypto is kind of changing the global dynamics of currency. That's not what we are going to discuss because you have a lot of material around that already on the internet, and that probably complicates you and keeps you away from the industry. In this series, we are going to go step by step in each video, and we are going to keep it tutorial based, where in each video we break down a few uh, parts of the crypto world, of how you can start investing there, and we give actionable ways to actually go buy and sell. And we also discuss the basic fundamental thesis of why we should buy and sell. So you can go and search about it, read about it, build your conviction on it. This is not going to be investment advice. This is going to be just for educational purpose. And it's more like a series that we want to treat as the basic building blocks of your crypto investing journey. It's probably that one series that you see about stock markets, where you understand how the stock markets work, who holds your stock, what a demat account is, how do you buy and sell stocks. You understand the basics of the stock market before investing over there. This series is going to be exactly that for crypto. And why it's a series and not a single video? Because we have multiple chains, we have multiple places where we can transact, and there are multiple rules that you need to keep in your mind to keep your investment safe and to do investments seamlessly without any friction and not feel it's rocket science. So let's start with three questions in this video. Let's answer those three questions and build build up over it, and basically understand how do we exactly start and what do we understand first. So the three questions that we are going to start with is: why should we invest in crypto? Where should we invest? And how do we invest? So let's jump to the first question. Why? Now, when you ask this question, you'll most probably end up hearing the word decentralization. You should invest in crypto because it decentralizes the world, it decentralizes finance, it decentralizes currency, it decentralizes power. The second thing that you'll hear is it's an alternate to traditional finance. It is decentralizing finance. So, this is true to a very large extent, but this doesn't give us anything actionable. And this is not the reason why a normal investor invests in crypto. Probably why you are seeing this video is that you want to make a lot of returns out of crypto. And that's where the majority of the people lie, which is getting unreal returns. They invest in crypto because they want unreal returns. We invest in crypto because we want unreal returns. And that's why we want to learn about crypto. That's why we want to get into the industry at the first place. So, uh, we just broke the myth of a lot of people who kind of believe that crypto folks are mad and they're just investing in on a belief that there's a new financial world they are creating. That's not the majority. The majority is getting unreal returns and diversifying their portfolio. Now, why diversify your portfolio into crypto? There are two reasons to this. First thing, potentially you can get higher returns than any other asset class, and that could drag your portfolio's average return by a significant amount. And this is something that kind of makes crypto very lucrative as a diversifying option. Second thing, crypto is an asset class that, to a very large extent, if we remove the past 1.5 years, behaves pretty differently from stocks, gold, and silver. And it is pretty unpredictable as well. And it's very important to have such assets in your portfolio, as these assets could actually turn out to be hedges in major crashes and major events. Along with that, crypto as an asset class is easily transferable throughout the world. So if you're someone who travels a lot internationally, then crypto diversifying into crypto makes a lot of sense for you, because now you do not need forex to kind of transact in countries and transact in a lot of countries, because stable coins are becoming uh, are getting regulated. There are crypto cards that are coming up. So that becomes a very good way to diversify geographically. And a very interesting new set of users are entering into crypto. And their thesis of investing is to get lazy returns. What I mean by lazy returns is something like an FD. So in FD, you just put your money and you're like, I'm getting returns. I don't need to think about balancing, rebalancing, anything. I don't even need to think about market conditions, because come on, man. In mutual funds, you don't need to think about all of this, but you need to think about market conditions. But in an FD, you don't need to. It's lazy returns. Bonds are lazy returns. And a lot of people are entering crypto to get these lazy returns from global asset classes. So, for example, you're an Indian, but you want to get invest into US bonds, or you want to invest in a real estate project in London. So people are exploring these forms of lazy returns. You want to invest in the yields that are coming from a real estate project in Dubai. And that's a very interesting segment of people that we are seeing in the crypto industry. And this number is growing. And you have you have some cool products that you can test out in this field. One of them is, of course, our product, which is AFI, and you can get an 11% lazy return on the AFI USD. You can also check out our docs of how that works, and typically how the strategy of getting those 11% returns works. But that's not what the video is about. This is a new segment that's growing, and this has very high potential, because if you see, hedge funds are pretty popular among the rich. And why hedge funds are popular? They're not popular because of the high returns they give. And a lot of people say, see, mutual funds and SIP and S&P 500 gives more returns than hedge funds. They're just blabbering bullshit, because hedge funds are famous of because of their stability. They are famous because they can deliver 9% returns every year, and that is the power they give. They give high net worth individuals the power of escaping the volatility drag trap. Your portfolio suffers a lot from something called volatility drag. You can read about it, but the basic gist is hedge funds as a product are something HNIs love, and they are a form of lazy returns for HNIs. And now such products can be democratized for retail through crypto, and give such lazy returns, risk neutral lazy returns to retail investors. And this is a growing segment that you can explore. Now, let's jump to where you can invest your money in crypto. So, a lot of people get confused what crypto is. Crypto is a new asset class, and we have multiple tokens in the industry. Bitcoin is not equal to crypto. It is just one cryptocurrency that you can invest in. Similarly, we have Ethereum, we have Solana, we have Hyperliquid, we have Monad, that's a new token, we have uh, Pump, we have MetaDAO, we have Eigenlayer, and the list goes on and on and on and on. We have so many meme coins that are launched on Pump. You can invest your money anywhere, and you'll have if you open X, or if you open Twitter, if you open X or Twitter, if you open Instagram, if you open TikTok, you'll have a few accounts recommending you different random coins and they'll be predicting they'll go 100x, 1000x. They'll show you their portfolios, their previous analysis. That's all bullshit. We don't have to listen to anyone. Most of the tokens in crypto are a scam. They are a pump and dump scheme. you do not have to pay attention to them. For now, just for now, as a beginner, let's focus on how you can invest in Bitcoin, Ethereum, and Solana, and what are the nuances you have to take care of while investing in Bitcoin, Ethereum, and Solana. So, with this, let's jump into how. And we'll also kind of, before jumping into how, let's discuss why Bitcoin, why Ethereum, why Solana. Why Bitcoin? Because it has passed the test of time. It is the biggest cryptocurrency with respect to market cap. It has a very high monetary premium, and it sticks to what it promised, and it has a growing uh, audience of believers. It has SIP money that's flowing in, ETF through ETFs. It has institutional adoption, and it has a lot of publicly traded companies that have it in its treasury. So Bitcoin has a lot of positive factors. Governments are believing in it. Governments are adding it in their treasury. USA is very bullish in it. These are a few reasons why you should keep your eye on Bitcoin and why you should probably start accumulating it while the prices are typically pretty low. The all-time high was 120K and now it's moving between 80K and 90K. So it's a good place where you can start accumulating. Obviously, you can have a dip at any point, and I'm not taking guarantee of any of it. No one can take guarantee of any of it, but that's the reason why you can possibly think of investing in Bitcoin. Second thing, why Ethereum? Ethereum, because what we just talked about, an alternate to TradFi, that's DeFi, decentralized finance. That entire segment is brewing over a chain called Ethereum. And these companies that are building over Ethereum, they have to pay an Ethereum gas fees for each and every transaction. And gas fees is like it's just like toll you pay on a new road for using that road. So instead of paying that toll over here, you're paying gas fees to the Ethereum network to use the network for building your decentralized finance applications. Currently, Ethereum is leading. It has the highest amount of value locked in the DeFi space, highest amount of value coming in, inflowing. So that's something that makes Ethereum a very, very valuable place and a valuable token to think about. Third thing, third one is Solana. Why are we even thinking about Solana? It's because it's the most popular chain for the most widely accepted use case of crypto, which is being a global casino, which is the meme coin saga, and which is getting rich as soon as possible. And all of this activity has been uh, leading on Solana. A lot of this activity happens over there, and Solana in general generates the highest revenue in terms of any other chains. So that's why keeping an keeping an eye on Solana is a smart move to play. Again, none of this is investment advice, but these are just key factors to think about, to read about, and to keep an eye on, to have your tickers on as a beginner because you don't know much about the industry and you're trying to create your edge i- in investing in this industry. When you talk about investing into anything, the most important thing is to create an edge. And that's what you're trying to do with keeping these uh, three cryptocurrencies for now in your watch list. Now, let's jump to how. How do you start investing? So, there are two things that you need to understand for now. There are actually a lot of things you need to understand. You need to understand custodial wallets versus non custodial wallets and blah, 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 gas fee and all of that. But let's stick to two things because this is what you'll be using, and you don't really need to understand all the terms to start using them. The first thing that you need to understand is what is an exchange. An exchange is a place where you can buy and sell cryptocurrencies. It's as simple as that. The exchange that we will be focusing on right now is Binance. And the flow of how you'll be operating is very simple. I'll show you all of this, but just listen to me for now. Now, the second thing that you need to understand is wallets. What are wallets? Wallets are places where you want to store your cryptocurrencies. You do not want to store your cryptocurrencies at an exchange. because it does it limits your potential to transact online. It limits your potential to access lazy returns. It limits your potential to access the entire Ethereum ecosystem, Solana ecosystem, the on-chain economy, the world of DeFi. So that's why you keep your money in wallets. Now, Phantom is generally recommended for your Solana and anything that you're holding on the SVM ecosystem, which is the Solana virtual machine, and anything that you hold at the SVM ecosystem to do a transaction for that, even a buy or sell transaction, or even a send transaction, you need to have some minimum amount of SOL to do that because Solana is used as gas fee in the SVM ecosystem. Very important point. You need Solana as gas fee to do any transaction on Phantom when you are transacting on the Solana chain. Now, the second wallet that we'll be using majority throughout the series is Rabi. Rabi is recommended for your EVM, Ethereum virtual machine. And over here, you would be needing Ethereum for doing the transactions. So ideally, what the workflow is going to be all about is we use Binance. Now, let's just so let's just type it out. We use Binance to buy crypto assets. So we pour in our currency over here, fiat. Let's just type fiat. We put that into Binance. We do a peer-to-peer transaction there to get crypto. Crypto. Typically, let's get something called a stable coin. Or it's an on-chain version of the US dollars, USDT or USDC. Typically this most of the times. And we use the crypto to buy BTC, ETH, or Sol. And then what we do is we transfer ETH to Rabi and Sol to Phantom. What we do with it over there, let's discuss that in other videos. But this will be our basic workflow. And now there's something interesting that we'll be doing over here. This, putting fiat in Binance and then getting in this can be replaced by something that is so a peer-to-peer transaction is basically transacting with a random individual on the network on the Binance exchange, and you basically send them INR on their UPI accounts, and you in return uh, get the crypto in some time. There's a risk associated with this. The risk is that you might be transacting with a criminal, and your bank account can be banned. And that's a risk which prevents a lot of people from buying crypto. So that's where we come up with something, with a way to invest in these assets. And that is, let's just type it down. That is buying from friends in the space. Friends in the space. For example, I need 100, 200 USDC to buy 100 USDC, 200 USDC worth of Bitcoin. Now, what I tell my friend is I send him my Rabi or Phantom wallet address, and I'm like, can you send me this much USDC on the respective Ethereum or Solana networks? Now, once I get that from them, I basically transfer that same amount to my friend in INR, or I give them a cash or credit card anyways. And then I basically uh, use that USDC by transferring it on Binance to buy crypto, and then I send that crypto back into these wallets. We'll be seeing that entire workflow in the future tutorials, but let's jump into these three exchanges. Let's view them and let's start making these accounts in the next video. Let's start with Binance. Hello. So this is how Binance looks. This is the page. We have to sign up. We can sign up directly through Google, do our KYC, and start using the platform. This is Phantom. Phantom is more or less an extension that we'll be downloading. And this is Rabby that we'll be downloading. We'll have tutorials of each and every video, each and every particular app discussed in this video one by one. So yeah, this is where we start our crypto investing journey, and hopefully let's learn something new, and let's start investing in crypto and diversifying our portfolio. That's it for this video, guys. See you in the next tutorial.